Good morning. It's Jeffrey Christian of CPM Group. It's about 10 minutes after 11 o'clock on Friday, the 9th of August here in New York. Gold right now is trading around $2,465. It's up a couple dollars. It has been moving up, looking like it's going to test 2,500 soon. Again, I'll talk about the market outlook at the end of this video. Right now, I want to talk about central banks and what central banks are not buying gold and which are buying gold. And I'm going to have a mix of current trends levels and what's going on with different stories that you're hearing about central banks buying gold or wanting to buy gold or secretly buying gold, and try to dispel some of these current issues and lay out the current trends. But at the same time, I also want to talk about longer-term issues. And I have some, historical anecdotes about central banks that I'll put in to sort of help explain how central banks work. And then at the end, I'll update the markets for gold and silver, and I'll mention platinum and palladium too. Why would we review central bank gold activities now? Well, there are several reasons. One is that the high gold price over the last year and the last several months since April has shifted central bank gold purchasing and sales activities. The Russian war against Ukraine and related sanctions against Russian entities have added to these shifts in the activities. So it's becoming differently important, or important in a different way, to the gold price. There have been some unsupported and inaccurate speculations that China is secretly buying gold in the international markets. Almost certainly these are not true. They don't hang together with the reality of what the People's Bank of China does and what it seeks to do. It sounds to me like somebody who has a conspiratorial bend and doesn't believe anything that anybody in authority tells them, but really is always looking to be bullish on gold, has spun a beautiful web of speculations that maybe hold together, but don't reflect reality. There are some market participants who have read the World Gold Council did a survey of central bankers. What do you think about gold? Do you think that you'll add some gold to your portfolio in the years ahead? The World Gold Council does this, I think, maybe annually. And some people have read more into the World Gold Council's recent article about its findings on this survey than probably they should have. So there's this view that we've picked up in the market that there are African central banks that are either indicating currently buying gold or imminently planning to buy gold. And just want to put that into place. We spend a lot of time discussing things that are being said in the precious metals markets that aren't accurate, as opposed to spending time in what we call the real gold and silver and platinum group metals markets. And it's kind of corrosive to the soul to do that, but it's necessary. And a lot of our clients depend on us to be able to say to them, I know you just heard this. This is what you probably should believe about what you just read on the internet or from some bank or promotional organization or whatever. We ask ourselves, we have to ask ourselves, why do people circulate comments about secret gold purchases and central banks wanting to buy gold even though they don't want to? And we just really don't know. I mean, obviously there are some people who are promotional, bullion dealers who will promote anything to sell their metal, but other people clearly want to believe things that are not credible. And they'll go out of their way, as I said earlier, to try to think what's really going on because they can't possibly believe people in positions of authority. Having been raised Catholic, I kind of understand that suspicion for people of authorities, but it's beside the point. it's beyond our expertise as metal market analysts. It's really something for psychologists to explore. And I have, in fact, recently been reading some books on from credible, not popular psychologists, but real psychologists, discussing some of these issues about why people believe things that are clearly not right. Why do they go out of their way to seek information that's clearly inaccurate? And what do they do with it? It's pretty depressing reading. So, talking about central banks, in the past, central bank gold activity was very secretive, and it was kind of an interesting place to be. Now, the secrecy really dissipated after 1999. There were a few central banks, key central banks, that were arguing over the course of the 90s that the secrecy was counterproductive. In the absence of central banks saying what they're really going to do, there were all kinds of rumors circulating, and bullion banks and dealers would use those rumors to promote their sales of precious of gold. And there were central banks that said, look, if we were a little bit more transparent, we could get rid of these rumors, and the gold market wouldn't react to rumors that Spain is going to sell all of its gold, or so and so this central bank is buying gold. Other central banks, the majority of central banks in the 90s, disagreed with that. But in 1999, with the advent of the euro and the European Central Bank, a couple central banks sort of forced the hands and increased the transparency of gold information from among central banks. It came at a time when central banks were becoming more transparent, as it were. Central banks historically were very secretive. Paul Volcker and then Alan Greenspan started to change that and increase the transparency to the point where some economists think maybe the Fed is a little bit too transparent nowadays across the board. But there was this increase toward transparency, and there was an increase toward organizing and if you want to use the term, making it more professional, a lot of information that central banks have and share among themselves and distribute. So you've seen certain agreements passed at the IMF and in other venues for central banks to be more transparent with information, including information on their gold and gold reserves. So as a result, a lot of those secret transactions that happened in the past don't happen anymore. People will act like they do. And there's one conspiracy theory company that was really great because they were taking information from the Bretton Woods era, when the dollar and gold were tied to each other as the basis of the international currency regime. So you had $35 an ounce for the price of gold. It was fixed at $35 an ounce. And then other currencies were fixed to the U.S. dollar exchange rate wise. So you had this whole thing. And, the purpose of the Treasury back then, one of the major purposes of the Treasury was to maintain that $35 an ounce leak. So if there were upward pressures on gold or downward pressures on gold, upward pressures or downward pressures on the dollar, the Treasury would be in there buying and selling the dollar to maintain that $35 an ounce level. And, there were gold conspiracy groups in the Audis, in the period 2008, 2012, that would say, well, we have these letters from the Treasury from like 1964 talking about how the Treasury needs to maintain the price of gold at a certain level, as if the policies and practices that were important in the Bretton Woods dollar gold international currency regime had continued beyond 1971, which was, of course, nonsense. So the secrecy sort of disappeared. And, it's terrible because I have great stories of our work in the 80s and 90s and after that with central banks. But most central bank non-disclosure agreements are lifetime. in the mining industry and other industries, it's 1 year or 3 years or 5 years. With central banks and other government agencies, a lot of times the non-agreement, the non-disclosure or confidentiality agreement is for your life. You just don't talk about this stuff ever, which is sad because there's some really great stories that I'd love to tell people, but I don't even tell my wife. Also, many central banks don't mind letting inaccurate public suppositions, myths, and errors go uncorrected forever. Again, I can't really talk about certain things, but some of them clearly take pleasure in seeing these misstatements about their activities circulating decades after they occurred. Others find the rumor mongering offensive and counterproductive, which is why we had this push toward transparency in 1999 and thereafter. The Bank of England decided to sell half of its gold. Right? It had about 20 million ounces of gold. It represented a very large portion of its monetary reserves. It, similarly to many other central banks that had accumulated a lot of gold during the gold standard eras, decided to sell half of its gold. It made that decision in a series of projects between, say, 1989, 1988, 89, and to 1992. And it made that decision. It then, in 1992, opted out of the future euro and European Central Bank because there was a currency crisis in Europe. And it said, no, we're just out of that. And it decided to wait because it knew that with the advent of the euro and the ECB, January 1st, 1999, there would be any number of European central banks that would be wanting to sell their gold before January 1st, 1999. And the Swiss National Bank and the Bank of England had a gentleman's agreement and basically said, we both want to sell gold, half of our gold, but we're not going into the euro and the ECB, so we're going to wait until 1999 to start our sales programs. And by the way, when we do, we will be very transparent. We're going to announce what we're doing and how we're doing it and the results of our sales. So it was very interesting. Now, they made that decision 88 to 92 after a lot of study and discussions at the Bank of England. Gordon Brown became the Chancellor of the Exchequer. He ran the British Treasury in a period 1997. Let me just sort of get that data. I think I have it right here because I was prepping these notes. 1997 to 2007, he was Chancellor of the Exchequer, and he ran the Treasury. 1999, the Bank of England announced that it was going to be selling gold. It sold gold in 1999 when the price of gold was ranging basically between $260 and $300 an ounce. He took tremendous amount of criticism for having made the decision at the Treasury to sell that gold in 1999. He never said, I inherited that decision. It had been made by 1992. And he never stood up. He took the bullet for the British government, and he never corrected that misperception. And that misperception now is part of the canon that a lot of people believe about central bank gold. Why he never bothered to do that? I guess he's a good soldier for the British government. These are central bank gold net buying and selling on an annual basis. 1950s, we had a Bretton Woods gold standard. You had central banks using gold to settle international trade and capital flows. So if European companies and and Japanese companies and other companies outside of the United States were selling stuff to the United States and getting payment in the dollars, they would give their dollars to their local bank, which would give it to their central bank, which would come to the U.S. Treasury and say, you say that the dollar is worth $35 per ounce of gold. Here's our dollars. Give us your gold. And there was this tremendous amount of gold that was bought by central banks at that time. Yeah, people talk about the 100 million ounces or so that the bank Bundesbank has. All of that was accumulated after 1950. In 1949, the Bundesbank had no gold. Things changed in the 60s. Talk about that. You had this long period of time, 1989, the Maastricht Accord, which laid out the structure and operational policies of the European Central Bank, saying, okay, in 10 years, on January 1st, 1999, ECB comes into power, the euro becomes the currency of all these countries, and certain policy changes, including significant changes in monetary reserves had to be pre-disclosed to the ECB and discussed and approved if you were going to be part of the ECB. So if you were going into that program, you wanted to sell your gold before that period of time, before 1999, so that you could do it discreetly, because we were all secretive and discreet back then. That changed 1999 through 2005, 2006. You saw the British and the Swiss sell a lot of gold. By 2007, that most of those sales were behind it. The way we phrased it was those central banks that wanted to sell some of their gold had sold that amount of gold that they wanted to sell by 2008. So you saw gross sales fall. At the same time, you had the rise of the Asian tigers. You had higher oil prices. I'll talk about Russia in a minute. And so you had central banks that had not accumulated a lot of gold during the Bretton Woods era, that had accumulated a lot of dollars during the 80s and 90s into the aughties. And they had, whereas the Europeans and the United States and other industrialized countries had maybe 80, 90, 95, 97% of their monetary reserves in gold, these other countries had 80, 90, 95% of their monetary reserves in U.S. dollars. So they started a program around 2007, 2009, i.e. the global financial crisis, the Great Recession, and the way the U.S. Treasury took care of the U.S. banks at the expense of everybody else, including foreign central banks. So around 2008, 2009, you started seeing those central banks selling some of their dollars and buying gold and building up gold and diversifying their monetary reserves. You had the same tendency to diversify your reserves on both sides of the market. Those central banks that had accumulated a lot of gold under their previous gold standards were diversifying their reserves away from having 80, 90% of their reserves in gold and buying currencies, mostly the U.S. dollar. And those central banks that had accumulated a lot of dollars in the 80s and 90s were diversifying their portfolio and selling dollars to buy gold and other currencies. And this is how it all shook out. And you can see here, from 2008 until 2024, this goes through projections of 2024, on average, central banks were buying about 10, 12 million ounces a year, on average. Some years they bought less when the price was high. Some years they bought more when the price was low. And that's what central banks do. Now, when you talk about central bank gold policies, you have to talk about the policies, the practices, and the realities. There are aspirations. What do you want to do with your monetary reserves? There are plans. What do you expect to do? You know, the Little Rascals had a great skit in I guess 1930s, 1940s, where they said, "I'm not expecting this. I'm just wanting it." And then there's the actions. What do you actually do? One bank we know, one central bank we know, decided in 2010 that it wanted to add around 20 million ounces of gold initially to its monetary reserves over a period of several years so that it didn't disrupt the gold price. That was 2010. That was 15 years ago. It has yet to start buying gold. Domestic political financial issues have intervened and kept it from launching that program. And it's not alone. Another central bank we know and worked with took more than 2 decades to start its buying program. So when you talk about central banks and they say, yeah, I'd like to have some more gold in my portfolio, you have to understand that's their aspiration. It may not be in their plan. And even if it's in their plan, it may not occur because of other realities that set in. One of those is that the need for foreign exchange supersedes the desire for gold. And we've seen this with at least 3 central banks over the last year and a half, 2 years, selling gold in order to raise foreign currencies to pay for their imports. The same was true in Russia. When the Soviet Union was in place, the Russian government had enormous gold reserves. What portion of those belonged to the central bank versus other parts of the government was not clear. In 1988-89, the Soviet Union joined the IMF, and the IMF said if you're a member of the IMF, you have to declare how much gold you have in your monetary reserves. Now, the People's Bank of China, China had joined the IMF around 1978. The IMF and the World Bank made this transition where they stopped recognizing Taiwan as the legitimate government of China, and they recognized the communist government in Beijing as the legitimate government of China. And so China joined the IMF in late 1970s. And the IMF said, so how much gold do you have? And they said 12.3 million ounces. Late 80s, Russia, the Soviet Union, in its last years, on its last legs, struggling financially as well as politically and socially, joined the IMF. IMF said, how much gold do you have? They knew that China had said 12.3, and despite what many Americans think or believe, Russia and China have a centuries-old competitive nature and issues between the two countries. They have a very large, long border. So Russia said to the IMF, we have 12.9 million ounces, i.e. more than China, in 1989. We said, gee, we thought you have a lot more. And they said, yeah, well, this is our monetary reserves that we're reporting to the IMF. And there may be other gold. We know what your estimates are, CPM Group. Don't change them, because there may be other gold that we own as a government that's not monetary, that it's not in our monetary reserves. When the Soviet Union dissolved in 1991, the other Soviet republics said, hey, we want our share of the monetary reserves of gold, and on a pro rata basis. And Russia said, okay, here's how much gold each of you guys, like 14, 15 other republics, get. They said, wait a second, we understand from CPM Group's research and reports and consulting services that the Soviet government had a lot more gold. And the Russian central bank said to these other central banks that we're giving you our share of monetary reserves. If you want to get your share of the other gold that the Soviet Union may or may not have had, go talk to the Russian army. An interesting thing. I probably shouldn't have said that, but I think we've written about it in the past. So if I had violated a confidentiality, I violated it a long time ago. After 1996, there was a desire to build gold stocks, but the Russian government had very little foreign exchange, and the oil and gas prices were down around $10, $15 a barrel and about $2 per million cubic feet of natural gas. So they didn't have a lot of money coming in to the central bank, and they needed foreign exchange to buy imports. So that delayed that. The United States invaded Iraq in 2003. The oil price started rising. It had gotten down to $10 a barrel. It started rising. It got up to $140 in 2008. Enormous amounts of U.S. dollars and euros flowed into the central bank of Russia, and they started buying gold around 2007. Russia built its gold reserves to nearly 77 million ounces they were 12.9 million ounces in 2006. Starting in 2007, they started buying gold, mostly, almost exclusively, from domestic refiners and mines. And they built those reserves up to 77 million ounces by 2022. They did that because there was tremendous hostility between the U.S. government and the Russian government, and they didn't want to have their money in dollars and euros insofar as they could avoid it. This is the central bank of Russia's gold reserves since January 2022, just before the Ukraine invasion. As you can see, it's fluctuated sharply. On the right-hand side are the net monthly purchases and sales. And you can see Russia has been financing its government, its country, and the war using gold. When they have a little extra money, they buy gold. And when they when they need the money for their war effort and just for general accounts, they sell gold. This is the title from a Bloomberg article related to and queuing off of that World Gold Council report. And I have to say, the World Gold Council report was very clear and very accurate, right? But people have taken it and read into it more than it said. So African nations are rushing to build their gold reserves to hedge against geopolitical tensions that have battered their currencies and fanned inflation. South Sudan, Zimbabwe, Nigeria, all taking steps to buy gold. No, not really. Most central banks have very low foreign exchange reserves. They don't have the capacity to use foreign exchange reserves to buy gold. In fact, Ghana it's a net importer of diesel fuel. And it went to the diesel importers and said, we'll pay for the diesel fuel with gold rather than dollars if you want. And they did that because they didn't have enough dollars to really pay for their imports. They were very low on foreign exchange reserves, but they were collecting gold payments from domestic gold mining. They will pay for it in gold, and if you don't want the gold, we'll pay for it in the dollar. We'll sell the gold in the market and give you the dollar proceeds. They started that, I believe, in the beginning of 2023, and from what I understand, none of the diesel importers have taken them up on that. They really want the hard currency rather than the gold. So Ghana may be selling some of its gold in order to pay for diesels. We just don't know. Yeah. Some central banks in Africa, as in Latin America, Asia, and other countries, serve as the national market makers. They buy domestic production and they sell gold into the market to people who need it. And they have non-monetary gold trading accounts, which don't show up in the monetary reserves that are reported to the IMF or that we count. And they don't show up for a variety of reasons that are legitimate, including the fact that the monetary reserves are reserves and they should be stable. And if you have a trading account and it goes back and forth because you're buying from producers one month and you're selling to jewelers or investors in the next month, then your monetary reserves, if you can include that in your monetary reserves, then the monetary reserves are bouncing up and down, and you don't want that. Companies do the same thing with their balance sheets. They go out of their way to have off-balance sheet items so that they can show a stable balance sheet to investors. And governments, central banks will do that too. So there are trading accounts in numerous countries, including several central banks in Africa, that do that. I want to run through a couple of bricks. First, Africa. How many African central banks have been buying gold since 2008? Well, Mauritius, which is an island in the Indian Ocean, 1,000 miles from the African coast, bought 338,000 ounces between 28 and 2016. They haven't bought anything since then. Guinea bought a net of 218,000 ounces between 2014 and 2020. And you can see 2014, they actually sold 60,000 ounces of gold, and they bought it 50,000 ounces and replenished their reserves in 2017. They needed foreign exchange, so they sold 60,000 ounces again in 2018. And by 2020, they were in better shape, and they bought 220,000 ounces. Egypt bought 40,000 ounces of gold earlier this year, and those are the central bank gold transactions. So there may be a lot of central banks that have aspirations to add gold to their reserves. And there may be even central banks that are planning to add gold to their reserves, although central banks that we talk to don't seem interested in doing that. They want foreign exchange. But there doesn't seem to be a lot of action, and there doesn't seem to have been a lot of action over the last 16 years of African central banks buying gold. Again, it's not that the World Gold Council got it wrong. It's that people misread. People who are enthusiastic about gold read into the World Gold Council report what they wanted to hear or read, even if it wasn't there. What emerging central banks really want, and this bar, which is from our gold yearbook, and there's an explanation, these are emerging economy, developing economy central banks, and Russia and China over on the left. You can see Russia 77 million ounces, China 72 million ounces. For Russia, that was about 28% of their reserves, depending on how you define reserves, because a lot of their foreign exchange reserves are frozen since 2022. China has almost as much gold, but it's about 2 or 3% of their reserves. There are only about 3 or 4 or 5 countries that have more than 30% of their reserves in gold, and they tend to be countries that have very low foreign exchange reserves or have political issues with the rest of the world. Uzbekistan, Kazakhstan, Venezuela, those are the big 3. Everybody else is down there under 20%. So central banks may want gold, but it's not that they want to move a lot of their money into gold. The Reserve Bank of India, this goes back to 1950, it built up its gold reserves to about 12, 13 million ounces by the 1990s and aughties. It actually sold a little bit in the late 1990s, but then it reversed that decision. It bought 6.4 million ounces from the IMF when the IMF sold a chunk of the 103 million ounces it owned in 2009. The United States, under George W. Bush, declined to pay our annual fees to the IMF. And when the IMF and the other countries that were members of it said, that's kind of rude of you, Dick Cheney said, well, why don't you sell some of that gold to pay for yourselves, because we don't want to have part of any multi-government association and organization. That was his policy. It was the Republican policy. It still is. So when the IMF sold some gold in 2009, India bought 6.4 million ounces of it. That's that big chunk right there. And then starting around 2017, they have been buying in the open market. Reserve Bank of South Africa used to be the market maker for South African gold. If you were mining or refining gold in South Africa, you sold it to the Reserve Bank of South Africa, which actually had some tie-in with the Rand refinery, which was primarily owned by the 6 major mining houses that were big gold mining companies in the 50s, 60s, and 70s into the 80s in South Africa. With the transition to a multiracial government and some of the changes in society, after 1994, A, mine production was falling, and B, basically, the Reserve Bank of South Africa basically got out of that practice. And so they have had substantially no gold added to their reserves really since around 2003. And their reserves are about 4 or 5 million ounces, a relatively small amount. So when unrespectable gold promoters talk about the BRICS going to be trading and settling their trade in gold, Reserve Bank of South Africa, like the Reserve Bank of India and Banco do Brazil, which I'll show you next, don't really have a lot of gold to do that. Done. Not going to happen. Banco Central do Brazil had 9 million ounces of gold back in the 50s. They sold it off in the early 60s during various government crises. They rebuilt some of it during the 80s as mining took off within Brazil. The Banco Central do Brazil is the market maker for gold transactions within Brazil. So as mining increased in the 80s and 90s, they were buying the gold from domestic production, and then they would sell most of it, I think, overseas, but they would add some to their reserves. From 1999 to 2001, they had a crisis in the country, and they sold about 3.5 million of the 4.5 million ounces of gold that they had, 4.6 million ounces. And then since 2011, they've been buying back some of that, getting back over 4 million ounces in recent years. China's central bank has, I said, about 72 million ounces of gold. It announced that it had 12.3 when it joined the IMF in 1977. That's the year. It added to its reserves in 1999 when it got out of its role, no, not 1999, 2001. It got out of its role as the national market maker for gold. People's Bank of China does have a gold trading desk, and it trades gold not only for its own account, but also for other companies and government agencies that may want gold or have gold to sell. So it will buy and sell gold on the account of other country, of domestic entities other than the People's Bank of China. So you have to be very careful to understand this is gold that the People's Bank of China is buying for its reserves, and this is gold that it is taking into its trading account on behalf of another entity within China. And there was a big mistake that has gone uncorrected in other people's gold data, where they saw 10 million ounces of gold go into the People's Bank of China trading account, I think in 2022 it was, maybe. And they misidentified that as being purchases for monetary reserves. And they've never come back and said, oh, it really wasn't there. But China, when they got out of the market making, they added the gold that was in that trading account into their monetary reserves, taking it up to about 20 million ounces. After the great global financial crisis, there was a tremendous amount of gold that was sold by institutional investors, individual investors, and corporations within China. And it was in that trading account. And the government asked the People's Bank of China to add that to its monetary reserves, partly to send a message to the United States Treasury that they were dissatisfied with the way the U.S. Treasury had handled the global financial crisis and the financial crisis in general, helping U.S. banks at the expense of everybody else. Other groups in China bought gold. They sold it over as the price fell in 2013. The People's Bank of China added it to its reserves. So we're not really keen on buying gold at $1,600 or $1,700 an ounce. But when the price fell to $1,280 and a whole bunch of gold came into its trading account for sale, it said, well, 1280 were buyers. And it continued to buy from 2013 onward into 2019. It stopped buying in 2019, and then because the price went over 1300, 1350, went back up to 16, and then 18, and then $2,000 an ounce, and the People's Bank of China said we're not buying at these prices. And from middle of 2019 until until November of 2022, it didn't buy any gold. It resumed buying in November of 2022 when the gold price got down to, I think, $1,280 or something like that. No, it fell sharply, and they said, okay, this is good. We'll buy here. We're not going to be buying at 18, but it got down to 1640. And they said at 1640, we're buyers. And they have been buying most of the time since that time. These are the monthly purchases, and you can see nothing until November of 2022, when they bought a little over 1 million ounces out of that trading account, bought a little less than 1 million ounces out of that account in December, and then they were buying again until April. When the gold price shot up in April, they stopped buying. They bought none in May. They bought none in June. They bought none in July. So they have been away from the market, despite what some people would like to speculate is true. And you can see on a broader basis, the gross purchases and the net purchases by central banks as a group have been declining since the first quarter, the first 4 months of 2023. And you're seeing that, and that's an effect, that's primarily the effect of the gold price rising sharply during this period of time. And you can see this goes through June. You can see that by June, the purchases were very low and there was some sales. This is the actual data for the first 6 months of the year. 3.8 million ounces of net purchases in the first half by various central banks. There is about 1.5 million ounces sold by central banks. Again, it's Russia, Uzbekistan, two of the bigger sales. The Philippines sold some, needed some foreign exchange. And then on the purchase side, you can see Turkey was buying some. China was buying some through April. Kazakhstan was replacing some of the stuff it sold early. 3.8 million ounces in the first half. You annualize that and you got 7.6 million ounces. We think it might be a little bit higher. I think our projection right now is 10 or 12 million ounces for the full year. It may not be there because the price of gold has been stronger than we had expected when we made that earlier projection. I want to turn attention. I've already talked way too long. Markets. Gold prices have been trading between $2,350 and $2,500 over the over most of the course of July. Continuing very volatile. It will continue to be quite volatile. Our expectation continues to be that the price could trade between as low as 2,300, as high as 2,550 over the course of August, into September, October, and the final part of the year, and into 2025. We think that there'll be more political and economic uncertainties, and that the price of gold will probably rise, break above 2,500 in a more substantial basis, especially in 2025 and the final couple months of this year. Silver prices have shown greater weakness, and we expect that will continue. We think the price has good support above $26 an ounce. Obviously, it has a lot of resistance around $32. We think that this range will be volatile, but it will continue as the last 4 months, 5 months of the year going forward after August occur into 2025 and possibly into 2026. We expect a very sharp increase in silver prices because of political and economic concerns. Platinum, we took it back to 2015 just to show you how it came down after the strike of 2014 in South Africa. It traded primarily between $800 and $1,000 for extended period of time. 2021, it shot up. 2022, it shot up again when Russia invaded Ukraine. Has been trading sideways to lower. We do think it has downside potential over the next several years. We are not advising investors to buy platinum unless it's a very short-term transaction. Palladium similarly rose very sharply from 2016 into 2021, 2022, and it's been coming steadily lower ever since that time. We think it's vulnerable. It's got some support around 880 right now, but we do think that the palladium price has some more downside. And I throw in one last chart, which is the long view going back to 2000 for palladium. And you can see how high the price of palladium got after 2016, 2017, and how it's coming back down toward that range that was in effect from the global recession, Great Recession, global financial crisis, 2011 to 2016. You saw prices around $600 to $800 an ounce. Further reading, Exorbitant Privilege. Barry Eichengreen is one of the best and foremost authorities on monetary systems. He's written numerous books about gold standards and about international currency regimes. He wrote this book 2011, I believe. I've talked about it in the past. It has great discussion about the volatility that you saw in the monetary system under the gold dollar standard and the very painful and costly efforts that various governments had to undertake from the late 1940s into 1971 due to the fixed exchange rates and the fixed exchange rates relative to gold. He dispels a lot of the nostalgia for the good old days that never really existed. He also has a couple chapters ago, well, here's how we go forward into a new international currency. What's the future for international currency regimes? Here's a good future projection. Here's a bad projection. It's a really good book. It's worth buying. We actually, when it came out, bought quite a few copies for clients, friends, and relatives. CPM Group also has just updated its gold and silver 10-year projections. We also, in order to do that, have projections for the global economy and national economies, the United States, China, Europe, UK, India, Brazil, Russia. We have updated our 10-year economic outlook. We've updated our gold and silver outlooks, and those are available depending on how a client wants this information. The price range of providing these 10-year projections is, as it says here, between $9,500 and $26,000 a year. If you just want a single report on a single metal, it's $9,500. If you want quarterly updates on both gold and silver, it's the high end. And clients negotiate this. A typical client doesn't just take these reports. They also buy consulting time and perhaps some other research that we provide. So that's available. You can contact us at info@cpmgroup.com if you're interested in discussing ways to buy these reports. That's all I have. Sorry it took almost an hour today, but there's a lot to say, and I really did want to put out a good, honest explanation of what's going on with central banks, both historically and currently, because they've always been used to spread rumors, and there's still a lot of misinformation. And while central banks are much more transparent than they used to be, they're still very discreet, and they don't necessarily talk about the rationales and the plans, the aspirations and the plans behind their actions. They'll report what they've done with gold and leave it to the imaginations of people reading the statistics. That's where we come in. We provide a rational analysis. You can go to our website. You can read about various things. You can buy our gold, silver, platinum yearbooks. You can send an email to info@cpmgroup.com and say, CPM, talk to me. I want to use you guys to help me do better in managing my price exposure to gold, silver, platinum group metals, and other commodities. I'll talk to you next Tuesday. In the meantime, take care of yourself, take care of those around you, and try to do something good for the earth. Sorry I took so long.